So I'm going to talk about fibs today as well. I'm going to get to the point as well. So if there's more people coming on, they could carry on jumping on. I'm going to get straight to the point, yeah? I'm not going to waste no time and just give the nuggets out to you. And I really want you to understand why prices retrace back as well. But before I just share a screen 1 second, if I can, whiteboard. And I'm going to just draw it out for you exactly what exactly is fibs and how it helps you, because a lot of people don't know what retracement is. So basically, if you are in an uptrend, everyone here should know what uptrend is. When the market is moving up and it doesn't move in a straight line. When it goes up, it pulls back. This pullback here is called a retracement. And that's called a retracement. How much does it pull back before it goes back up again? That's exactly what the fibs give you. Gives you the indication of the fibs as well, depending on how the price actually moved as well. In a downtrend, you'll get that pullback, a retracement. How much does it retrace back before it drops down? These sort of retracements, and this is where we're looking for price action signal. How do we know if it's exactly there? There's a line with key levels. I do not use this solely just on its own, but what I do use it for is to add more confluences as well. So keep that in mind. Do not just solely use it. Otherwise, if it can go against you if you don't know what you're doing. If that makes sense. Let me just cross that out. I'm going to open up a chart and I'm going to start showing it to you live as well. And I show you the levels as well if you want to set it up as well. Hold on 1 second. Let's open it up. Just drag that back here. Now listen to this now, yeah? Obviously, I'm gonna go into a smaller time frames because there's more movements of back and forward. Now, if you see that swing high and that swing low, we've got a pullback in a downtrend. How did you know it's going to pull back to a certain level? Obviously, you have your few key levels. Number one, but fibs are awesome to identify the pullbacks. I'm going to show you them on live market. But before I do, I want to show you, because I believe a lot of you guys be using TradingView. I never use TradingView. I just find it difficult. It's just that I've been using this for a long time. So I'm just so used to using the MetaTrader 4. So I'm going to show you how to set up on the MetaTrader 4. On the TradingView, I believe it's already set up there. You could just change the settings, add these levels in. Now, the levels that I've got is 23.6. Obviously, you got the 0, 23.6, 38.2, 50%, 61.8. You got the 786. You got the 77 in 70.7 in between, 88.6, 100. If you went through your IML Academy, he shows you exact the same as well. I do not want you to focus on the one I've got at the top. Yeah, that's going to be too complicated for you at the moment. That's where the market is heading towards. Those from the top here is where the market is heading towards. Now to add them, you click at the top, right at the top here, where the F is. If you can't find it there, it should be somewhere at the top here. Insert Fibonacci's retracements is there if you can't find it on your MetaTrader 4. But once you click that and you open it, you double click that line that's going through. You could change the colors to whatever you like. Once you got that dots there, right click that dot and go to Fibo properties. And when you go to Fibonacci properties, you might have a few different ones on as well. If it doesn't match this, if you want to take a screenshot now, take a screenshot. If you've got a pen and paper handy, you can write these levels down right here. But what I'm going to show you is it's not hard to add these levels in, and you get the drift as well. So to get a 23 or 23.6 on the levels, you need to write 0.236. 0.236. On the description, you can write whatever you like. Whatever you write there will show here, but keep it as 23.6. The next level is 0.382. Description 38.2. Right? You got the 0.5, which is 50%. This is halfway through 50%. So look at these as percentages, yeah? 0 to 100%. We're not going to look at the ones above. Not now. I'm going to talk about where the market heads towards. For now, you want to look at the retracement side of it. So once you got the 50%, the most important one, the golden number is 0.618, which is also known as the 61.8% retracement, the Fibonacci ratio, yeah? In between, I've got, I'll mix them around as well. But to add 70.7, I don't use that one. So avoid that one. Use the 786, yeah, 78.6, which is 0.786. and the description is type 786. So that's what you're gonna add on. That's exactly what you need. You could add on the extras. The extras and the top, all of them are in the IML Academy training. I believe Christopher Terry, when you go through the advanced, he teaches you how to add them on, and he's got them all there. So that's how you add them in. Change the color from here, how thick you want it. You could do it from there. Visualization is, you know, when you put it on, what screen or what charts do you want it to show? Keep it on show on all time frames, right? And you can name this fib as well, whatever you want to name it. That's totally down to you. That blue color is the line that's going across. Let me change that to something like red, so it makes it more easier for you guys. When you press OK, you see that's gone to red. So it doesn't make that much difference. Keep it to a color where you'll be able to see your screen. Keep it different to whatever your chart color is. I use black and white, and there's a reason behind it, and I explained it so many times what I use black and white for. But change it to whatever color that you can see, as long as you can see every single number there clearly. Now, let me just open up a whiteboard here. I'm going to show you exactly how the fibs actually work now, yeah? So when prices are going down, you got the swing high. You identify the swing high, which is the top here. Once it starts pulling back or retracing back in a downtrend, you've got your swing low right here. Now you drag your fibs from the high to the low. Remember, for a downtrend, it's high to the low. Yeah? And this will give you all the levels going across, all the different levels. Now, depending on the way the price moves, which I'm going to show you, depending on the way the price moves, yeah, and by adding other confluences, this will retrace back to a certain level. Now, how do you know which level it will retrace back to? If you are a beginner, always aim for 61.8. 61.8. It will go back to 61.8. Sometimes it goes to 50%, sometimes it goes to 38.2, sometimes it goes to 23.8. Was it 23.6? I can't remember, I'll check it again. It will. If it retraces back to a 23 and drops down, you just didn't enter the market. It's simple as that. Because you're a beginner, you're still trying to identify how the fibs work. If it does go as a downtrend, so if it's a downtrend, and the further it does pull back, it will pull back towards the 61.8. 61.8 is a golden number, especially when you're doing intraday trading. And I'm going to show you them on live markets, how it works as well. So it's going to open up your mind as well. Yeah. So 61.8, I would recommend for a beginner to start with 61.8. And from there, you start figuring out why it goes to certain levels. And I'm going to show you why it goes to certain levels. You need to identify, literally identify how the price is moving down from that swing high to swing low. Now, if you've got a rapid drop, let me just clear that now, yeah? If you've got a rapid drop, like it just dropped down like silly, boom, like for the news or whatever, it doesn't matter what it is, and it's given us rapid drop. The stronger the push down, the shorter the retracement. It'll retrace towards the 23.6 or the 38.2 with a strong push down. If it goes just like normal or mediumish, kind of strong but not too strong, the retracement will be between around 38 and 50. So you look at 50. The more it takes its time, so if it just goes down slowly like that, it'll give a deeper retracement back, and a deeper will be towards the 61.8, between the 50 and the 61.8. That's how price actually retraces back towards that. And I'll show you that on live markets. I'll show you the strong markets, mediumish, and mediumish you don't see it all the time, but you do see it coming back towards 50 and 61.8 right now, yeah? Let me just go back onto the, hold on one sec. Let me just go back onto, I think someone disabled annotation.
Monet, can you just manually mute everybody on your, from your computer?
Done, sure. Yeah? So everyone's muted as well. Okay, now, let me just open up a live chart. So I'll just go to a simple chart as well, yeah? Any chart, it doesn't matter which chart you go to. I'm going to show you how it works on a trending market. And that's more for trending market, but I want to show you a strong push down, yeah? Sorry, let me just go to a 4-hour one. I want to show you a solid drop down. So when you get a solid drop, you get a shorter retracement. So that's a solid drop with a small retracement back there. I want to show something that's so clear for you in a nice trending market. Now that looks like a 50%, yeah. But I'll see how it goes anyway. Let me just show you. Could you see the news push that market up solidly right up, and that retracement there in an uptrend? We see that. Let me just draw it out for you so it kind of makes sense to you guys.
Yeah, Munyes, you're not screen sharing. You're not screen sharing.
You know what? I just realized it just now. Boom. There you go. Is that better? Yeah. Okay. Look at this now. Yeah, for Fibonacci's. Now, when you get a price move up solid like that, could you see that solid move right up there? That's probably some sort of a news. Obviously, you got the pin bar before that as well at key level, so you knew that would have come. That pull up with the inside bar would have come. You should know it. If you're following price action, you would have known beforehand for that strong push up. But imagine you missed it and you see the strong push up. Now, when you get that strong push up, then you'll get that drop down, right? How much does it drop down? First of all, you need to draw your key levels, which is right here. And look, without the Fibonacci's, you got the key level that it came towards the key level, gave you a price action there, mother bar inside bar. Once it broke it, I shot back up again. That's raw price action. Now, with the fibs, how do you actually use it? So with the uptrend, you do it from the lowest point to the highest point of that swing. So the lowest point here was that pin bar wick. So you do it from the bottom of that wick to the high, top towards it. Now, that retraced back towards 50%, around 50%. But you have to realize this now. You had a key level there already. So that 50% shows that sort of key level is strong. Does that kind of make sense? So like I said, I do not use fibs on its own. I will always use it for adding extra confluences. So if price is going up and it pulls back, you will draw your key level. When it goes up and breaks that and it pushes back down again, now you already got the key level. Just to add more confluences, you put your swing low to swing high fibs up here and see if that retracement is around 38 to 50, like I said to you. Strong push up normally comes from 23 to 38, but that's not as strong as I thought it would be. You get a more stronger push from something like this sort of strong push with a shorter pullback, that's like 50 as well. I'll show you all the different moves and how the price actually moves back. But if you actually put your fib from that low to that swing high, the retracement came exactly to 50% and shot back up. But then again, you need to add more confluences. Add price action. Is it with the trend? You know, depending on if you're using indicators, which I highly recommend you don't, see if the indicators align as well. But let me show you more examples now of a strong push. I'm going to try to do higher time frames. I don't normally follow the small time frames. I'll go to a different chart. I see some strong push there. That's about 50%. I saw that coming. You could see I predicted that this week. It's going to come towards that area, wait for price action, go. Well, I believe 4 hour and 1 hour both gave price action when it came close to that area there. And it gave a good drop down. Stop loss was about 50%. So if you took that, you guys were awesome. If you didn't or you missed it, always keep an eye on as well. Let me just try to identify a nice moving. Can you see here, you got like a strong push down and then you got a small retracement. The stronger the push, the shorter the retracement. If I put a fib from that high, that swing high to that swing low, that retraced back exactly to 38.2. Exactly 38.2 before it dropped down. Now, obviously, I don't recommend just put it and wait for that retracement to come to 38.2 and add it, you know, go for it. I would actually go into the smaller time frames, look for price action at 38.2. So you got so many pin bars, so many pin bars, inside bar pin bars before it gave you that signal before it dropped down. So you had plenty of opportunity to enter with the stop loss just above that, and you would have got 1 to 2, 1 to 3 nicely. If that makes sense. Let me just show you a couple of more, yeah, strong push downs. USD, JPY, there's another strong push down there and a short pull up there. I don't know if you can see that properly, but let me show you another one. There's a strong solid push down there and a push up there. From that swing high to that swing low. Let's check here. Swing high to swing low. It came between the 38 and 50, around the 38. And when you go to the smaller time frames, that's when you look for price action around the 38. I'll go back, find out exactly where it was. Let me just find it there. That pull up there, it's not really giving me a price action there. If I go into the 1 hour one, let me see if I can find a price action with that pull up. I've got a couple of rejections. I've got a motherboard inside bar there. It's given some sort of rejection, a small pin bar, but not a solid one. You got another rejection there, but a pure key level as well. I predicted that ages ago, and it did drop down from there. You had a motherboard inside bar, and it carried on dropping down. So you get some sort of signal around those key areas.
See that I just drew. Yeah.
1 second, let me go back. Was there a 1 hour chart? Yeah.
I think so. Yeah.
Hold on. Let me just. You're gonna show me again, my brother. 1 second. Let me just. 1 hour chart, my brother. 1 second.
You did it.
You're gone.
Okay, see that big wick at the bottom, yeah?
Yep, that big pin bar.
Yeah, so that pin bar, yeah? Like obviously when it's come there, when the pin bar is like that, it's sometimes, I don't know, makes you think it's just going to go up.
You're right, but you have to look at it this way. The pin bar is in no man's land. I call this a no man land. It's not on key level, and this is not our prediction, because my prediction here was that it's going to drop down at key level.
Yeah.
With the trend. When something like that comes up, at no man's land, a lot of people get in it and they literally fail that pin bar. Pin bars and any price action, only look for it at pullback at key levels with the trend. That's when it works solid. That's not sticking out to me. Does that kind of make sense? It's within. Could you see it's like hidden? If it was sticking upwards like that, that would have been a solid price action. Yeah. If you actually look at proper pin bars with long wicks, sort of like that kind of sticks out. But you got a lot of pin bars like that that's not really sticking out, but they go your way as well. But you get a lot within against the trend that is sort of like hidden. They don't work. It has to be at key level, and you should have predicted this place before you even got today. Does that kind of make sense?
Yeah.
That's just the way it is. But if I look at the higher time frame, let me just delete that off 1 second. That was a 38.2. But all I want you to understand is a stronger push down, a shorter pull up. You see, from that high to that low, that was a strong push down. So you got a short retracement before it dropped down again. That's what I want you to understand. A strong push down, a short retracement. If I do it from that swing high to that swing low, from that high to that low before it started retracing, that came between the 23 and the 38, right there, before it just dropped down again as well. Obviously, I remember I predicted this a long time ago for a buy, and it did carry on going up. And even a couple of days ago, I think Sunday, I even said it's going to carry on going up. So if anyone got in, aiming towards it, it's still going up. It's not showing no reversal sign. It's going to carry on going up. But Fibonacci's, pull out another chart, any chart, it doesn't matter which one it is. If obviously that double B showed reversal, but in a trending market, strong push. You need to understand let me just look for something that a strong push. I want you to identify these strong pushes down. You got a solid push there, but that was a deeper retracement. It takes time again. Strong push up. Let's find a nice trend. You got a strong push down there and a little pull up there. So if you got identify in a smaller time frame, you identify more. It came towards the 38.2. So remember, the stronger the push, just keep that in mind. The stronger the push, the shorter the retracement. Stronger the push, shorter the retracement. Just keep that in mind. And now I'm going to show you, the decent the push. So if it takes its time coming down, it gives you a deeper retracement. That comes towards us. A lot of time it comes towards the 61.8, especially in the intraday charts. I'm going to show you that as well. Any chart, say Euro USD, let's go into the 4 hour or 1 hour. Find a nice trending market. Let me just turn that off. Any trending market, I'll just go randomly around. Just try to look for a nice trending so it's clear for you guys as well. I could even do that, but it's not clear for you guys. Let me just see if I can find a decent one. If you're more for intraday trader, this fibs is going to be very useful for you guys. So you have like a trending market here. Pull up, pull down there, another 61.8. That's another 61.8. I want to show you it clearly so you guys understand. When you start off simple, this market is a bit too. Wow. I can't even find a proper trending market yet, man. Let me just zoom out a bit. All trending, but I want to have a nice clear one for you guys. Let me see if I could do. Now that's still like too easy. Let me just. I've got one sort of like here. That's a strong push down, a short pull up. Strong push down, strong pull up. I mean short pull up. 1 second. I'm just trying to look for a. You see here. Let me just show you this area here. 1 second. Let me just. Before I lose that area, I'm just going to mark it here, yeah? Let me just see if I could. I look better when I zoomed out a bit. So when you look at these swings now, yeah? Let me show you these swings, yeah? From that low to that high, look at that. You got a swing low to a swing high. A pullback came to 38.2. The strong push is up. If I move that to the next level, that's the low there. And that's the high right up here. It came between the 23 and 38.2. Then you got another strong push up there. So that's the low there, right? And that's the high up here. The pullback was to 38.2. Price action, and it dropped up. It carried on pulling up. So that's a strong one. Let me just find you a normal moving. Let me see 1 second what happened recently, AUD USD. That trended. So if I go to a 4 hour or the 1 hour.
That was alright for 61.8.
This one here, yeah, from that swing to that low.
Yeah.
So that swing that low, the first pull up was this because I had quite a few strong ones and that looked like 38.2. Normally I see them all the time. I can't spot any today. Any trending market, they just normally. Let me just go into the 1 hour chart, yeah? Because 1 hour you'll get big. 1 second. But you know, something like this, it's like too confusing for them. I can see a 61.8 here. I can see. Does that make sense? So obviously, let me just put one here for you, yeah? If I put it from that swing high to that swing low, that's a 61.8 rejection. And it dropped the market there. Even the high here, that high, that you got the wicks coming up and the body closed below the 61.8. So that's another 61.8 rejection there. The carry on. But I just want to find something so clear. 1 second. So just kind of. So if you see the bigger picture here, you see that was a swing low and that was a swing high. So if you can find big swings like that, from that low to that high, you see when the market retraced back, it came down to 61.8 before it shot back up again. Does that make sense? It never gave a perfect price action there, no, but it gave some sort of rejection at 61.8 and it carried on going up. That was another nice one there as well. But let me see if I can find more. Let me just zoom out. If I find a nice trending market, I'll keep showing it to you.
Yeah.
I can see one here, that drop there, that pullback is a 61.8. You got nice ones here. Let me just zoom into this area here. Say that area. Okay. Swing high, swing low. That was solid drop down. That was a 38.2. If I move it from that high swing high to that swing low, that's 23. That was a 38 there again. Exactly. You could see that drop down. Once it started retracing back, there you go. You got the trend line there as well. Rejected the 38.2. And now look at this one. Next one, got a swing high, swing low. It come and rejected exactly at 61.8. exactly at 61.8. Gave a mother bar inside bar right over there before it kind of made that drop. So you need to identify the way price moves. Price moves solid like that. Look, you got a key level there, right? If you add the key level, for example, let me show you a nice example here. The way you're going to use the fibs is if you got a price coming up and it comes down and it goes up, you draw that key level up here. That's the key level you're going to draw. And then you're going to put your fibs from that high. Once it starts retracing back and it's a little bit down, you put your fibs from that low there to that high there. See what matches that key level there. So if I use that there, that key level actually went bang on there. So let me just see. Let me just clear that off. So if I use my fibs from that low to that high, that pullback was exactly at 50%, and it made sense as well. That 50%, around that 50% was a key level as well. So if you add that as the confluences, you can nicely get in and catch your pips from there, and it carried on going up. I'm surprised I don't see no proper trending markets like you used to here. There's another one here. So in a downtrend, swing high, swing low, 61.8 at key level as well. It rejected it and it dropped down. That makes sense? So you got the swing high here, swing low there, before it done a deeper retracement upwards, and it rejected exactly at 61.8, spiked up and the body closed just below 61.8. Remember, that's what I said, look for 61.8 from you got that high to that low there as well. Let me show it to you. So you got that top wick again to that bottom, came right near or close enough to the 61.8 there. So in a trending market, how much is it going to retrace back? At these key levels, never take it solely. I would always recommend, you got a key level there, right? Always recommend to enter with a price action. So always wait for some sort of confirmation, add more confluences before you take that. I wouldn't recommend it anytime before that. But in any trending market, once you identify a trending market, for example, even here, that low to that high, I think that came to 786. Let me just check that out. But that could be a 61.8. Yeah, that was between the 61.8 and 786, 77. Every single swing high, swing lows you do, it makes sense anyway. It always makes sense. The more you start using it, open up any chart. Let me just open up something like this. Go to the daily chart. Now look at this. That was a swing high, swing low. The pin bar rejected the 61.8 and it dropped down as well. Which one? This is the one I actually gave a signal out on as well. And I think I've caught just over 200 pips on this one myself. Hussein, did you stick onto this one? Hussein?
No.
Did you close it?
Yeah.
I kept that one open, man. I caught this over 200 pips on this one, man.
Yeah.
1 to 2 as well. But yeah, because obviously there was a strategy, there's a downtrend, a deeper retracement. That retracement came to a 61.8, gave a pin bar, and you had a 50% retracement, and the drop was solid. It just came, you got your 1 to 2 nicely there. Because I was showing you every time I was in there as well.
Yeah.
But if you look at the bigger picture, it doesn't matter where you look at. If you look at the bigger picture, let's say from that swing high to that swing low, you got that retracement, that pullback. So to say that swing high, now 1 second. Which one is it? Here it is, yeah. So you got like a swing high, swing low, and that rejected 61.8 exactly. Here. Obviously, what I'm trying to show you is these fibs, they show you exactly where it's going to retrace back to if you identify the trend correctly. Every drop down has a retracement. Once it starts retracing back, you guys think it's changed the trend, but you're not realizing it's heading towards one of the fib levels before it's going to drop down. So even if I do take that, if my 1 to 2 is within the 61.8, I'll aim for it. So if I was to buy around here thinking market has changed and there's a mother bar inside bar right over there, I would actually calculate if I get in from there, stop loss is about 174, is about 300 there before the 61.8 or whatever, depending on the stop loss. Is it there before the 61.8? Then you could take it. Does that kind of make sense? If you want to risk it, you could, break even when it hits 1-to-1, because even if it goes to a 38.2, the 1-to-1 is there, so you can break even. If that makes sense. So you got so many swings. Every swing high to swing low, it doesn't matter where it is. If you look at any chart, they'll come to this certain fib level depending on the way price moves. So look, you got that uptrend from that swing high, that retracement. How much is it going to retrace back? If you just put your fibs from that low to the highest point, that was around 50%. Rejected 50%. It wasn't a solid push up the way I expected it to be. Like I said, that's more for like a medium-ish push. A strong is when you get a couple of bars just pushing non-stop up. That's like a medium with the little breaks. In consolidation, fibs do not work. Don't even try and consider consolidation when it's moving sideways. They only work in trending markets. Keep that in mind. So if you were to go for that swing low to that swing high, and it started retracing back from there, it rejected a 61.8. Then you got the new swing low, which is right over there. Swing low, and the next swing high, that was like a solid push up. That came to a 38.2 right over there with the price action, and it carried on going up. Then if you even carry on with it, just say that swing high, that's the swing high there, right? And the new swing low was about where the pin bar or even that is. That rejected the 70.70, but obviously it made a price action around the 61.8. The retracements with the trend come around the 61.8. I don't think I've got much time. I'll go about 6 minutes. But if you've got any questions, go ahead and you could ask me. But that's exactly how fibs work. Fibs, you just need to identify the way price moves. So remember, the stronger the drop, the shorter the retracement. If it takes its time coming down, the deeper the retracement before it drops. And use your fibs from high to low in a downtrend, and if it's an uptrend, from low to high. And let that price show you, if that makes sense. If anyone is still confused, you could come on, unmute. I don't know if you could unmute yourself. I'm sure you should be able to unmute yourself or even push a message to. I've got about 8 messages, but I didn't even check them. What is the purple tool is using called? It's called fibs, Fibonacci ratios. For those who came in late, the way you get to the Fibonacci, if you're using the MT4, it's towards the top.
I'm gone, Munia, yeah?
That's fine, Hussein. I'll speak to you in a bit later on, inshallah. Okay. Look, if you're using MT4, MetaTrader 4, normally it should be at the top here. When you click on that, you should be able to drag it up and down. If you don't have that ratios that I've got there, I did explain it. You just go to fib properties, fib levels, and you add those levels in. The way you add them in, if you want to add a 23.6, just type in 0.236, 0.382 for 38.2. A lot of time you use the 61.8, so 0.618. Once you add them in, you keep adding them, change the color, whatever you want to do. That's exactly what a fib is, yeah? When it goes up, every retracement that you're getting most likely is going to go to a 61.8, depending on the way the market or the price has pushed up. It feels like a proper solid news, and they gave a solid. Let me just show you in a 15-minute chart or something. You see here, you got a solid. Let me quickly, I've got a few minutes left. That's probably because of some sort of news. That retracement is shorter. Then it went up, that retracement is shorter. Now, if you do it from that swing low here to that swing high, before it retraced, it came exactly to 38.2 before it carried on going up. Now, the new swing low is here, where the 38.2 was. The new swing high was about here. And look, it retraced back and came exactly to where? 38.2. 38.2 is for strong markets like this. But any decent, normal, standard, decent market, trending market is 61.8. Keep that in mind. And if I find any trending market, let me just try to find a trending market quickly. I've got about 3 minutes left. Let me just, it doesn't matter where it is, any swing highs or lows. Just can't even, 1 second, let me just zoom it out a bit. Should be able to spot it more. Any trending market, yeah? So you got that high to that low, that's about 50%. It looks like about 50%. That high to that low came to about 50. Yeah, 61.8 exactly, bang on. So it depends on the way the price moves. Now you got that strong push down, and then you got that retracement. I don't know how it works on this, but most likely it's 38.2. Look at that. That strong push down, that retracement came to 38.2 before it dropped down a bit. So if you were trying to catch 5-10 pips, that went down by 32 pips. That kind of makes sense. So that's the way fibs actually work. But I do not recommend anyone to use it solely. Always add that for confidence. So you got that swing low to swing high, that retracement. That looks about 61.8 or about 50. That's 50. Then you got the next swing high. You see that move was a little bit more solid, but it came to 50%. First, it came to 38.2 before it dropped down again. But what it is, play around with it, and you start, getting better and better, and you start understanding it in live markets. But remember, use it. Let me give you a strategy. See, I've got 2 minutes left. I'm going to actually quickly draw out a strategy for you guys. Keep an eye on this, and I tell you one thing, this will work more than 80% of the time. Let me just show you on a whiteboard. I've got about a minute and a half. I'm going to quickly give you a strategy before I go, yeah? So when you got a downtrend, I'm going to talk about downtrend, and it starts retracing back, right? You've drawn your key level just below that, or just at that point there, yeah? Once that gets broken, right, and it starts retracing back, this is where you're going to be looking for a price action. But let me tell you one thing. Sometimes when you put a fib from the high to the low, and if that level is between 50 and 61.8, so you'll have a level mark between 50 and 61.8. Let me tell you one thing. When the price comes into this, and if you wait for a price action, I swear that 80-90% of the time, that trade goes in your favor. And it will give you a solid drop down. A solid drop down. If you have that key level marked, put your fibs for confluences, yeah, and it's between 50 to 61.8. And if the line is around 61.8, and the price comes up and gives you, just say, a pin bar. Price action is like a pin bar or a mother bar. Inside bar, I talk about them all the time. Mother bar, inside bar. Let me tell you one thing, 80+% of the trades will go in your favor. That's a strategy. I taught quite a lot of people. I've even taught a lot of people in Zach's team as well, and they're all smashing it there as well. I've got less than 1 minute left. Yeah, uptrend is the same way. When it goes down, draw your level here, right? And when it starts retracing back, flip from low to high. The retracement is around 61.8. 61.8. Price action, buy. Don't look back, buy it with the trend. I hope that was very beneficial. If you've got any questions, brother, reach out to me anytime. Let me know what you think in the groups as well. It's always good to get feedback, and let me know what you want to learn next time as well.